It's Friday Coffee with your mortgage man, Eric. And here we go. Today we're going to talk about VA loans. So I got a message from a veteran a couple weeks back that asked me to dive into the differences between a conventional and a VA loan. And, you know, if he is a veteran, why would he want to go with a conventional over VA or a VA over conventional? I was like, man, that's a great topic. And I've come into those examples down the road where just because somebody has amazing credit and has 20% or 10% to put down, they just assume that the conventional route is the path that they should go and they shouldn't use their VA eligibility, which is most often not true. And here's why. So with a VA loan, first let's break down, you have what is referred to as a funding fee if you use the VA loan. Unless you are disabled, 10% disabled in the eyes of the VA, which is found on your certificate of eligibility. If you are found to be 10% disabled or more, you are funding fee exempt. What is a funding fee? Funding fee is just a fancy word for mortgage insurance premium. A tax, if you will, a mortgage insurance premium is just added to the top of the loan. Now, how much is that? It gets kind of expensive in the VA rules or the VA loans. So if you've never used your VA eligibility before, it's 2.15% unless you were in the reserves or the National Guard, and it's 2.4%. If you are a subsequent user, in other words, you're using it for a second or third or fourth time, then it is 3.3%, right? That gets pretty hefty. So, but again, if you are 10% or more disabled in the eyes of VA, you are funding fee exempt. That mortgage insurance premium that gets added to the top is gone. Now, which loan would be better? If I go 5% down, 10% down, 15%, and keep in mind, unless you put 20% down on a conventional loan, you have mortgage insurance, right? Monthly mortgage insurance, unless we do one-time single pay buyouts. I don't want to get into that and confuse you. So let's just say if you don't put 20% down on the conventional loan, you're going to have monthly mortgage insurance, right? VA, right? You don't have monthly mortgage insurance. And you can put more than 0% down, right? You can put 5% down, 2% down, 50% down on a VA loan. Just because you're going VA doesn't mean it's a 0% down program. Sure, you can get into a VA home loan with 0% down. That's one of the biggest bonuses, right, of VA. But you don't have to. And there are benefits if you actually do put monies down on a VA loan. So the first thing to understand, though, is differences in the interest rate. A VA loan, depending on credit scores, could be anywhere from 0.25% better to 0.5 to 0.75% better than a conventional loan. Did you hear me? A VA loan is going to have better interest rates than a conventional loan. So if you are VA eligible, you by most certain should be entertaining at least the idea of using a VA home loan and having your loan officer, loan originator, mortgage professional run the numbers for you. So if you're not funding fee exempt, you're not disabled, and you have to have a funding fee, and you put 5% down. So let's say we're going to go conventional, put 5% down. Okay, so we go VA, we put 5% down. Your funding fee drops from 3.3 to 1.5. If you put 10% down or more, it drops to 1.25. Now look, most loan officers, originators, banks, the big banks, USAAs of the world, they typically don't know these VA funding fee tables. It definitely takes somebody that's a little bit more experienced with VA loans to properly educate the consumer and give them proper options. Look, if we go conventional, you're going to have a higher rate. You're going to have monthly mortgage insurance. Where if we go VA, yes, you may have a mortgage insurance premium / funding fee, but your lower rate and the no monthly mortgage insurance, right? VA does not have monthly mortgage insurance. Your monthly payment is more than likely going to be better, cheaper, lower than the conventional loan. So, right, follow me there. There are benefits. Just because you have a 780 credit score and you make $200,000 a year or $83,000 isn't it doesn't, right? A VA loan could be the better way for you to go versus the conventional loan. Something to think about. Now, here's some of the things that we'll hear out there that are misnomers on why some people, some agents will kind of deter the veteran from using a VA loan. Because there's misnomers. Well, the VA appraisals are harder, they're harsher, they're more conservative, right? I mean, I've heard those things as long as I've been in the industry. And in my take, and what I see that comes across my desk, that's not the case. I just don't see that. I don't see where they're more conservative on the values. I don't see where they're harder or harsher with a condition from the appraiser. And let's say that they are. Let's say that there's credence to some of those people that say that. Well, isn't that into the benefit of the veteran? Are we not protecting the veteran if that is the case, right? Are we not, like I said, protecting our veterans, our borrowers, our buyers, right? I mean, so think about it that way. But from my experience, I just don't see that to be the truth. Now, what are the differences? Here are the differences. When it comes to the processes, right? Is it more difficult or is it not more difficult? A VA appraisal in the state of Arizona is $600. So that's usually a little bit of a knee-jerk reaction when we tell the consumer it's $600 for an appraisal. What? Oh my goodness, right? Look, that's across the board. Even playing field. Doesn't matter which lender, doesn't matter if bank, doesn't matter if the property's here in Phoenix, or if it's in Show Low, or if it's in Bullhead City. That appraisal is $600 in the state of Arizona. That's it. Whereas a conventional appraisal, that differs from one lender to another and one area to another. Here in Phoenix, our appraisal fees for conventional are $475. Some banks are $5, $5.25. So there is a little bit, of a savings in the appraisal part of it. The only other factor is in a VA loan, we're going to require a termite inspection. Now, think about this. Almost every transaction out there, your agent that is representing you is ordering a termite inspection anyhow. It's being done. You want to know if your home has termites or wood rot, right? That's a thing. It's of due diligence inspecting the property. One of the things you should do. The only difference is in a conventional loan, we don't want to see your termite inspection. It's not a requirement. Underwriting, right? We as a lender, we don't want to see it. In a VA loan, mandatory, we must see it. So there's the fear of opening up Pandora's box and now we got to get a re-inspection for the termite guy to go back out if termites were found. So, there's the concern of there's one extra layer of maybe a headache. And it's not that bad because you're already getting the termite inspection, right? That's it. That's it in a nutshell. So we should be providing these options to our veterans, right? They've served their country. They're eligible for a VA loan. And just because they come to you saying, I want to put 10% down, I got a 750 credit score, I want to go conventional, just doesn't mean you shouldn't ask the question, are you VA eligible? Even if they say, yeah, but I want to, I want to go conventional. It's your duty to at least say, hey, let me just run the numbers. Let me show you what that would mean on a VA loan. I'll give you a cost comparison to both the loans. And you can make the decision. You have to, or you should be at least disclosing that to the veteran. All about protecting the veterans and giving the veterans the best service since they've served our country, right? I think most of us feel that way, but most lenders, I don't think that way, right? And I've seen where some agents, like I said, have steered their clients away from going with a VA loan. And I get it. It's a tough market here in Phoenix, and and there is some credence to well, hey, if you go with a VA loan, they may not accept your offer. They may accept a conventional offer, right? And in my opinion, that just means that the agent representing you should be doing a little bit more of due diligence and contacting the listing agent on the property that they want to buy and saying, hey, look, our buyer can more than qualify for a conventional loan, but he wants to go VA because it's a lower interest rate and the payment's $114 cheaper a month for him. Why wouldn't he go VA, right? And plead the case. And I know sometimes when we do that, the sellers, the listing agents, they feel better knowing that. Thank you for sharing that. We don't have this vision in our mind now that it's somebody that's just barely, hopping across the finish line, if you will, right? So sometimes when we are forthcoming with that information, right? Hey, look, they can go conventional. By all means, they can, but they want to go VA. The interest rate's lower, the payment's lower. It makes sense. So with that said, VA loan information, kind of diving deep into the weeds of it. Friday call with your mortgage man, Eric. 602-757-2171. Have a good day. Bye.